The global investment landscape is in constant flux. Today, a new trend is emerging, one that has captured the attention of savvy investors worldwide. Chinese stocks are surging, outpacing traditional safe havens like the US dollar and even the volatile cryptocurrency Bitcoin. This shift signals a potential turning point in global market dynamics, with China's economic might taking center stage. For years, investors have flocked to the US dollar and assets like Bitcoin, seeking stability and growth. However, the winds of change are blowing. Meanwhile, on the other side of the world, a different story is unfolding. China, the world's second-largest economy, is experiencing a surge in market confidence. Investors are pouring money into Chinese stocks, drawn by the country's robust economic growth and the promise of future innovation. Join us as we navigate the shifting sands of global finance and uncover the opportunities and challenges that lie ahead. The allure of Trump trades is fading. These investment strategies, once popular for their promise of high returns, are now facing headwinds. The US dollar, a traditional safe haven, has lost some of its appeal. Investors are concerned about rising inflation and the potential for a weakening US economy. Bitcoin, the poster child of cryptocurrency, has also experienced a downturn. Its volatility, once a draw for risk-takers, is now giving investors pause. One example of a faltering Trump trade is the performance of infrastructure stocks. Despite promises of massive government spending on roads, bridges, and other infrastructure projects, the anticipated boom has yet to materialize. Another example is the energy sector. The rise of renewable energy and concerns about climate change have dampened investor enthusiasm. Investors are realizing that political promises don't always translate into market realities. While the US grapples with economic uncertainty, China's economy continues to power ahead. The country's robust growth, fueled by a combination of government stimulus, technological innovation, and a burgeoning middle class, is attracting significant investor interest. China's commitment to renewable energy, artificial intelligence, and other cutting-edge technologies positions it as a leader in the industries of the future. One key factor driving China's economic success is its focus on innovation. The government has invested heavily in research and development, fostering a thriving tech sector. Chinese companies are now global leaders in areas such as artificial intelligence, 5G telecommunications, and electric vehicles. This technological prowess is attracting significant foreign investment and fueling economic growth. Another factor contributing to China's economic strength is its growing middle class. As incomes rise, so too does consumer spending. China's economic engine is humming, attracting investors seeking both growth and stability. Section 4, Data tells the story. Chinese stocks outperform. The shift in market sentiment is evident in the performance of key financial instruments. While the US dollar and Bitcoin have struggled, Chinese stocks have surged ahead, delivering impressive returns for investors. The Shanghai Composite Index, a key benchmark for Chinese stocks, has significantly outperformed the S&P 500, a broad measure of the US stock market. Over the past year, the Shanghai Composite has gained over 15%, while the S&P 500 has struggled to stay in positive territory. Specific sectors within the Chinese market have performed even better. The technology sector in particular has been a standout performer. Companies involved in e-commerce, artificial intelligence, and cloud computing have seen their valuations soar. Investors are betting on China's technological prowess and its ability to lead in the industries of the future. The data clearly shows that Chinese stocks are outpacing their US counterparts. Section 5. Looking ahead. Navigating the shifting sands of global finance. The global economy is in a state of constant flux. Old assumptions are being challenged, and new trends are emerging. The rise of Chinese stocks and the relative decline of traditional Trump trades is a testament to this dynamic environment. Investors must adapt to these changing dynamics or risk being left behind. The global economy is complex and influenced by a myriad of factors, many of which are difficult to predict. Investors should exercise caution and conduct thorough research before making any investment decisions. The current trend suggests that China will continue to play an increasingly important role in the global economy. Its economic might, technological innovation, and growing middle class make it an attractive destination for investors seeking both growth and stability. The rise of the dragon is real, and its impact on the global financial landscape is only just beginning to be felt.